Bitcoin's post-halving bull run, analysis of key on-chain indicators and what's next. Examining Bitcoin's recent post-halving performance and what lies ahead based on on-chain metrics. November 14, 2024. As Bitcoin embarks on its post-halving bull run, the market's temperature is heating up, yet signs indicate it's far from overheating. Key on-chain indicators reveal a balanced dynamic between profit-taking, miner activity, and liquidity influx. These factors suggest we are in the early stages of a new bullish phase, with potential for substantial price growth as the year progresses. Let's dive into a detailed analysis of these on-chain metrics to uncover what's driving the market and what lies ahead for Bitcoin. 1. Profit-taking activity, healthy and sustainable. The adjusted spent output profit ratio, aSOPR, measures the profitability of coins being moved on-chain. When this ratio is above 1, it indicates that holders are, on average, selling at a profit. Historically, during early bull phases, this indicator reflects confidence among holders who take profits without triggering a reversal in the trend. In the current market, aSOPR shows a consistent, but controlled level of profit-taking, suggesting that holders are realizing gains, but not in a way that threatens the uptrend. This dynamic aligns with a market that is heated, but not overheated. Profit-taking is essential for healthy price appreciation, as it allows new participants to enter, while existing holders adjust positions. As long as the aSOPR remains at manageable levels, this early-stage bull market can continue its upward trajectory. 2. Market valuation, room for growth. The market value to realized value, MVRV Z-Score, is another key metric in assessing Bitcoin's valuation relative to its fair value. When the Z-Score enters the red zone, it signals that Bitcoin is overvalued and typically foreshadows market tops. Conversely, the green zone indicates undervaluation, usually marking cycle lows. Currently, the MVRV Z-Score is rising, but remains comfortably below the overvaluation red zone. This positioning suggests that Bitcoin has significant room for further price appreciation before reaching overheated levels. The rising Z-Score is a bullish signal that points to strong demand and valuation growth, yet it remains well below levels that have historically triggered corrections. This reinforces the idea of a market still in its early or middle bullish phase, with potential for sustained upward movement. 3. Miner activity, balanced and supportive. The Miners Position Index, MPI, in combination with the stock-to-income, S2I model, and monthly issuance-based supply burden, MI, offers a unique perspective on the role of miners in the market. Miners are a critical source of supply pressure, especially in post-halving environments, when the issuance rate decreases. In the current cycle, the MPI shows a balanced state, where miners are not under severe revenue pressure. This reduces the likelihood of heavy miner selling, which can disrupt bullish momentum. Furthermore, the price is close to the S2I line, representing the optimal post-halving price for the market. This alignment between price and projected fair value suggests that miner supply is being met with sufficient buying demand, further stabilizing the uptrend. Miner activity is, therefore, a positive force supporting continued price appreciation, without overwhelming the market with sell pressure. 4. Stablecoin liquidity, fueling the bull run. Stablecoin liquidity is a vital metric to assess buying power in the crypto market. When stablecoin liquidity inflows increase, it reflects an influx of capital that can be used to purchase assets, like Bitcoin. In the current chart, stablecoin liquidity is rising, but has not reached extreme levels seen in speculative peaks. This increase in liquidity aligns with a steady, but sustainable bull run, where new capital flows into the market without triggering a speculative frenzy. The liquidity influx provides a foundation for further price growth while absorbing any sell pressure from profit takers or miners. The stablecoin liquidity bands confirm a market structure that is well positioned to support sustained upward movement, rather than a short-lived spike. This is another indicator of a balanced, healthy market poised for more gains. 5. Post-halving accumulation base, foundation for price growth. The consolidation period around the recent halving has created a strong accumulation base, evident across multiple on-chain metrics. This base has historically marked the foundation for bull runs, often leading to price gains of 200% to 400%. As the market exits this consolidation phase, these indicators suggest that Bitcoin is primed for a significant upward move, supported by a solid accumulation base that acts as a strong support level. Accumulation phases provide a foundation for speculative rallies, which gain momentum as retail and institutional interest build. With the market structure set for higher prices, the current conditions favor a bullish continuation that could see Bitcoin reach ambitious targets. Potential scenarios and future expectations. Bullish continuation scenario. The most probable scenario is a steady, controlled uptrend supported by rising stablecoin liquidity, balanced miner activity, and manageable profit-taking. Bitcoin could climb toward key psychological levels, such as $150,000 by the end of the year. This scenario would likely include minor corrections that reinforce key support zones without breaking the bullish trend. These pullbacks would serve as buying opportunities, particularly around post-halving accumulation levels. short-term corrections and accumulation opportunities. As the market heats up, minor corrections or sideways consolidation periods are likely. These phases would be healthy for the market, allowing new participants to enter and existing holders to adjust their positions. Watching stablecoin inflows during these corrections can offer insights into whether buying interest is sustaining the rally. Key support levels formed during the recent consolidation period will be crucial in these phases. Blow-off top in late cycle. Historically, Bitcoin bull runs often culminate in a speculative blow-off top phase, where exuberance drives the price well beyond sustainable levels. Should indicators such as the MVRV Z-Score or stablecoin liquidity reach historically high levels, a final speculative push could propel Bitcoin above $300,000 as retail interest surges. However, this phase would be short-lived, followed by a sharp correction as profit-taking accelerates and liquidity exits the market. Conclusion: Bitcoin's post-halving bull run is in a structurally sound and promising phase, with on-chain indicators aligning for a sustained uptrend. The market is heated but not overheated, as profit-taking remains balanced, minor activity supports price growth, and stablecoin liquidity inflows provide the buying power necessary for further gains. The recent consolidation around the halving has set a strong foundation, and all metrics suggest that Bitcoin is entering an early-stage bull market with room to grow. As we move forward, monitoring these indicators will be essential to gauge market sentiment, liquidity dynamics, and potential speculative excess. For now, the market structure appears robust, with the potential to reach ambitious targets as this bullish cycle unfolds. Bitcoin holders and traders should prepare for an exciting journey ahead, as the post-halving phase gains momentum